Hey guys, I'm Tamara Mayer and welcome to the Knockout Trader Dojo and our Market Unwrap series. Now in this series I'm going to take a look at fundamental elements and their counterpart technical analysis to see how they all stack up and if we can uncover any hidden insight within the charts. So today I want to take a look at the Japanese yen crosses and the Nikkei index market. And we know that the Bank of Japan has an ultra loose monetary policy, which is strong divergence to the rest of the central bank. So currently the Bank of Japan still believe that they need to stimulate the economy, while other central banks are tightening monetary policy and increasing interest rate. Now we've seen before the Bank of Japan making amends to the yield curve control. We see that influencing and affecting the Japanese yen, so we see a strengthening of the yen. However, since we have a new head of the realm of the Bank of Japan, there was a lot of expectation from many analysts that we're going to see some sort of a change to the Bank of Japan monetary policy, but we have yet to see that happen. And with every monetary policy coming out of the Bank of Japan, so we should be due one at the last week of July, then we see the yen actually being sold off in reaction to the hold of the current ultra loosening monetary policy. But further and further as we get to see the yen weakening against other major currency, then come a lot of analysis and a lot of fear in the market that the Bank of Japan is actually going to intervene. So from a technical point of view, what we see is overextension on higher time frame. So what I want to do is jump straight into the chart and take a look at a couple of very interesting currencies. And I want to start with CAD yen. So we saw some economic data out of Canada last week, basically an increase in unemployment rate, and that saw the Canadian dollar being sold off. So this is what we're seeing here. The sell-off actually started on Thursday. There was a strengthening of the Japanese yen, and with the Canadian dollar continue on Friday too. So let's take a look here on the higher time frame and see how the higher time frame are faring up. So we can see that we had a very strong bullish candle for the month of June, and currently what we are is overextended, meaning there is strong distance or far distant, big distance between where price action sits right now and its moving averages. And as we know, the further the overextension is, the higher the likelihood that we're going to get a pullback or a snapback into the averages. What we can also see here is that we are just coming shy of the previous high. So it doesn't, and it probably won't mean anything if this candle will end up bullish and will keep on going higher. So the candle for the month of July. However, if this will represent the next swing high, so we'll get a red candle and a break below it, then the fact that we came also close to the previous high but couldn't go above it, it's a rather more bearish sign. But so far this candle is only a couple of days, 10 days in the making. Now if we'll take a look on the weekly chart, we can see that we had a very strong push and we are due a pullback, so we could potentially pull back into this green line of mine around the 105, or even if I'll mark the next level here, these highs are around the 106 area, and we will still be nicely in an uptrend and potentially another higher low and another attack at this previous high. Now when we take a look here on the daily, what we can see is that this low actually didn't go lower than the previous low, so that could potentially mean that there's still buyers sitting at this area. So what am I looking for in this market? And I like this market because on the monthly time frame it hasn't really pushed above the high as we've seen with other ones like the Swiss yen or the pound yen, which we'll take a look in a minute. But this one actually came shy of that high. So I'm looking at this area, I'm looking at this breakout level, and what I want to see for a potential sneaky short around this area, I want to see the market pulling back into this area. I want to see it taking up around this breakout level and then losing momentum here, because because if the market will put a lower high here on the daily chart, then we could potentially see a deeper pullback in the context of the daily and a pullback into the averages in the context of the monthly and the weekly. So for a little sneaky short here, I really like the CAD yen. But keep in mind that this week on Wednesday, we're going to hear from the Bank of Canada, and there is high expectation in the market for another increase of the interest rate by 0.25%. And as we increase the interest rate, the divergence between the two banks is getting bigger and bigger. We might see buyers coming in and pushing the price higher. So if we break this previous high, then we potentially have a higher likelihood of going higher. So there's a lot of elements here, a lot of fundamentals that come into place. So from a technical point of view, this thing is due a pullback, but it might be that this is all that we are getting. So this level, this red line around the 108.50 area is quite crucial. And then the next one to the upside will be around the 109.5, which is the high over here. Now, if we compare this one to one such as pound yen as an example, so let's take a look. What we can see on the higher time from the monthly chart, it's a very, very strong push to the upside. And if we'll zoom out a bit, we can see that we cleared this previous high over here, we cleared this one obviously, and we're coming up into this origin of the move. Now it's a very strong overextension, and it would be a nice thing to see a pullback into the averages. So once again, if we'll see a strengthening of the Japanese yen, and we do tend to see intervention from the Bank of Japan in the market. So we will have a look at the dollar yen as well, because when it gets to a certain level, we tend to see those intervention. If we get a strong pullback, one of the favorite ones that I'm looking at for a buying is the pound yen, and the area that I'm looking at is from this green line, which is the previous swing high, to that pink line around here. It's all that area that it's basically a pullback of this move. There is like a big push over here, and then a bit of consolidation over this month, over the month of May, and then another strong push. So I want to see a bit of a release of this very strong buying pressure, and hopefully we can get it back into this area, into that consolidation area. But this is one of the strongest one, and if we'll take a look at how the pullback is happening, we're actually, or the catching up with the averages, we're really going sideways over here. So this market is so strong that it hasn't been able to even pull back like what we've seen there with CAD yen. We're just simply going sideways, but we are still overextended. And a lot of the time we tend to see fundamental news that basically move the market quite sharply, and then it brings it back into the averages. But from a technical point of view, all that we know is that we are due some sort of a pullback. It could be just sideways into the averages, but it looks less likely for the buyers to have another power to keep pushing the price higher. It just makes the market more overextended, which means a further, it just defer the time that the pullback might come, but there's a high chance that the further the overextension, or the bigger the overextension, the higher the likelihood is that a pullback is on the cards. So if we take a look here on the daily chart, we can see that we're just going sideways. So if with the CAD yen, we actually saw a break of the sideways action, and we had some sort of a nice precise level, we don't have the same thing over here as well. So if I'm looking for a sneaky short, this one will probably won't be it, because so far what it shows us is there's still a lot of buyers in this market. The other one is dollar yen, and we actually, after non-farm payroll on Friday, we actually saw a strong sell-off. So once here, again, we broke that low, but in this one, I really want to concentrate on the level that it's reacting to. So what I'm going to do, I'm going to put this on the weekly chart, and we can see that basically where we pull back, or where that sell-off stopped, it was the origin of the move that pushed to a lower low. So this is a quite crucial area, and we're basically back into that area. Where we stopped on the buy side is also quite important, so I'm just going to mark that here as well. So I'm looking at this low. It's the low of, let's call it the breakout area. So we sort of like pushed higher, came back down, lower high, and then broke through it. It's a strong wick. And where did we stop? Exactly at that area. So this could be for a potential move higher. I would like to see compressions of price underneath this level. But for a potential short, it's similar scenario to what I'm looking at with the CAD yen. Again, the problem here, similar to CAD yen, is that we haven't taken this previous low. So if from here, because currently it's the beginning of the week, still Asia session, so we could potentially see this one coming back up and keep on going. But if it will react to this daily breakout level and starts to go lower, it might seem like the pullback is on the card. But so far, it looks like the buyers are about to take control. Now, if we'll take a look on the monthly, we can see that we still have a bit of way to go before we get to the top here. And this is the area that the Bank of Japan is starting to intervene. So if I'll go back into the daily and just zoom out a bit, then we can see these candles around here. This is the intervention. You can see the market was basically pushing the price higher and higher and higher, way above the comfort level of the Bank of Japan, and that's the intervention in the market. So this is one thing that we need to consider again, and that's to go with the Japanese yen against the pound, is that the further we are in that overextension, we might end up in intervention territory. Now, the weaker one in this case are the Aussie and the Kiwi. So for potential shorts, again, I'm quite interested in Aussie yen and in Kiwi yen. So as you can see from the daily, we're actually back into a downtrend. On the weekly, it doesn't look as strong. We had that big push, but we couldn't push higher, and we actually confirmed a lower high here. And on the monthly chart, if we'll take a look, it's a similar scenario. It couldn't go any higher, and if we'll zoom out a bit, we can see how strong this level has been in the past. So it's quite a strong level on this market, and it might mean that we're just going to get another pullback. A pullback into that 93 area will be quite nice. So on overall, the Japanese yen is still quite weak, but the fact that we've got massive overextension, if we're looking at a potential setup to the long side, we always need to be careful. How much further can the price get more overextended? What further weakening of the Japanese yen will the Bank of Japan tolerate? And also, at what point in time will they actually join the rest of the central bank and say, we've got enough inflation, we don't need to stimulate the economy any further. And even if they just start slightly to tighten the screws, it could have a magnitude type of magnificent and magnitude, high magnitude type of event on the currency market, because the market is currently, there's a lot of loans that happen. The bond market is going to get influenced by this. So there could be some shock in the forex market and in the bond market. So it's quite a delicate work that they need to have perform if they want to start lowering their intervention and tightening the screw without creating those shock waves in the market. Now, I want to take a look here on the Nikkei, because this one of the gainer that we've seen from this ultra loose monetary policy, but also we've seen a lot of interest in Japanese companies. Again, a lot of money is pouring into the economy, and we saw the Nikkei rising higher and quite strongly. So we broke this really strong level around that 38.50. So once again, we're in the midst of a pullback, and the question is a pullback to where? So if we'll take a look here on the weekly, and I'll just zoom out a bit, I'm basically looking at areas between this high and these highs over here. So I'll just zoom out a bit. Oh, actually go down into the daily so we can see the activity around this area. So we can see it was the previous swing high, and then we pull back into that area. So this area, the pink line, is the origin of the move that pushed to a higher high over here, but then the pullback couldn't produce us another higher high. And quite like this kind of scenarios, because what it means, it's sort of like ping above this high but couldn't get above this previous high. So potentially we are in the midst of a bigger pullback, and it would be nice from the contents of the higher time frame. So the area that I am looking around this market is between the pink line, that 31,400, 500 area, to the 3800 area. I just want to see, again, release of the buying pressure. I'm still quite bullish the Nikkei, and if the Bank of Japan will keep on the ultra loose monetary policy, then we could see the Nikkei rising some more. One of the things to pay attention to from the monthly point of view is that we do have that crossy area here as well. I like that. I like the fact that these candles stop around this area and the next one started here and pushed to a strong higher high. We basically reacted to the round number. We'll zoom out a bit, and I think we need to go a lot longer to see where we got to. We haven't been here in a couple of decades. So there's a strong rise here on the Nikkei, and one of my favorite markets at the moment. So basically the Japanese yens are looking very interesting. The other one that I wanted to add, I almost forgot, was the Swiss yen. So the Swiss yen is one that I've been watching quite closely, and in this one, again, very overextended. And as we can see, this is the monthly chart. We basically broke up the previous high and that spike that we had here. For those of you who don't remember, this is the spike that was formed when the Swiss bank removed the peg to the euro. So it was a one sunny day. Well, I'm not sure if it was very sunny over there, but in January, Thursday, as I recall, and they removed the peg. They had a peg of 1.2 to the euro, and they completely removed it, and the market basically ended up with a black swan and a shock wave and a very strong increase of the Swissy. So as you can see, this is the spike over here, and we're already trading above it. So that's quite important. Again, very overextended. And in this case as well, I'm looking for a pullback. It would be great to pull back into this candle over here. Again, similar to the pound yen, we have a push and a bit of consolidation and another push. So a pullback into that area is something that I would love to see. But so far, this one looks very, very strong. Again, quite like the pound, we're just going sideways, a little bit of a push lower, but nothing really to write home about. We already see buyers coming in here. So the areas that I'm looking for potential entries are either over here around this high, but again, this is too high up for my liking. I do want to see a proper pullback, so most likely in the contents of the weekly, so somewhere around here, that purple line of mine around the 155 to 156 area, around the area between the 50 and the 61% retracement over here. So that's it. That's my analysis for the yen and the interesting market that I'm after. I wish you a happy knockouts, and I'll see you next time. Bye for now.